Hello and welcome back to our channel. Today's video is all about supply and demand using with the ICT strategy. You may have heard of supply and demand before, but do you really understand how it works and why it is so important? Well, you are in luck because that's exactly what we'll be discussing in today's video. Supply and demand is the backbone of any market, alright? We'll be looking at a real-world example to help you better understand how the law of supply and demand works and how it affects your everyday life during when you're trading the market. All right, so sit back, relax, get yourself a cup of coffee, and let's dive in. Here we are. The rules is first we're going to illustrate before we go to the real chart. We're going to see if we can mark it here to make you a little bit understand what it is exactly and how to find it. So we're going to start with how to find a demand zone. So in order to find a demand or a supply zone, we have to identify the direction of the market. Let's say here we have a low, high, high and low, and then higher high. So once you identify the market is making higher highs, higher lows, which is an uptrend market breaking previous highs, you know, giving us a break of a structure here. What we do next is within this move that broke this structure, we have to find the higher low that caused the break of this structure. So that higher low could be the general order flow, which is right here, or it could be an internal higher low before the break of a structure that caused, you know, the break here. So it could be somewhere here, the 50% of the move, or it could be down here. So once we identify our demand within this move, what we do now is we're going to go to the 15-minute time frame and we're going to wait for the market to pull back to the zone. Okay, so we're going to go to the 15-minute time frame or the 30 minutes or the 1 hour. So let's say we have our demand zone here, and then on the 15-minute time frame we have to look for a confirmation of a change of character. All right, and then a retest back to the demand zone, and now we initiate our trade, target the previous highs here. What happens is a lot of new traders, they think when they see the market doing this on the lower time frame, they think we are in a downtrend, but they don't know the general order flow of the market is an uptrend. So you always have to know on the higher time frame the direction of the market, if the market is making higher highs or higher lows, to determine your interest and the direction of the market. All right, so now that we understand, now that I hope that we understand how demand works, we're gonna try to illustrate and see how supply works. So in order to find a supply zone on the reverse, we have to look for the same signs. Okay, so what I mean by that is we have to identify the direction of the market. So here we are, we have a high, low, 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 high, low, low. Okay, so once we identify the market making low highs, low, low, or the price making lower highs, lower lows, breaking structures to the downside, previous lows here is broken, this move here created a new low low. So what we do now is we have to find the cause. We have to basically build a story. So we have to look for the cause of this break. Okay, what caused this move to break this structure? Where was the lower high that broke these structures? That lower high could be the general lower high, which is right here, or it could be an internal lower high that caused the break of this structure. So if we have that low high over here, then we're gonna have to look for our supply zone here and then mark our our original lower highs. So either way, now we're gonna go to the lower time frame and we're gonna have to look for the change of character or the confirmation to determine if this is where our supply is. So if the market on the 15-minute time frame breaks through this lower high, that means this structure is invalid. The market went from downtrend to uptrend. So what we do is we go to the lower time frame to look for our entry. So once we get to where the supply is, we're gonna have to look for a change of character on the lower time frame, like the 15-minute, 1 hour, 30 minutes, 5 minutes, 1 minute. Okay, mainly 15 minutes is the better one, okay? So once we find the change of character on the lower time frame, we're gonna have to wait for the move back to the supply zone that creates. Wait for that, and then initiate your entry, and then target this previous lows here. Okay, so this is how you find a supply and demand. Now we're gonna have to go to the real chart and find out how it looks like with the interest. Okay, we're gonna be using GBP/USD as an example today, and we'll be using the TradingView platform to analyze this market. So here we see the market is making lower highs, lower lows. Clear from here to here, the market was basically making lower highs, lower lows. So right here we have a break of a structure. We're looking for a demand zone, okay? So we have the break of a structure. We mark this on our higher time frame, specifically on the 4-hour time frame. All right. So once we identify the direction of our of the price, now we have to look for the demand, the demand zone that caused this move to break the structure. So it could be the original lower high, higher low here, or it could be an internal higher low here. So it could be this higher low, which is the general order flow, or it could be an internal, higher low that caused to break this structure. All right. So now we're gonna have to go to the 1-hour time frame and look for where what caused that break of the structure. All right. So now we have a move. We have the market moving from here, not breaking anything, failing, and then now moving, not breaking anything, moving, breaking the internal structure, but not breaking the original order flow here. And then we have the market here, pulling back here. So from here, this higher low here broke this structure here. Okay. So now what we do is we mark our demand, this last down candle that caused, or this last higher low that caused the break of this previous highs or previous structure. All right. So now once we identify that, we're gonna have to go to the 15-minute time frame. Let's cut this. Let's go to the 15-minute time frame and look for our entry or our confirmation. So once we go to the 15-minute time frame, let's replay it a little bit. All right, now that we have a confirmation candle that's basically giving us a push to the upside, we're gonna have to go to the 5-minute time frame, and then now the 3-minute time frame. All right, this is our last lower high that caused this break of little structure here. So what we're looking for is this, that, and then up, and then retest, and then continuation. Okay, so now let's replay. Okay, we're looking for a replay now. All right, so now this area here is broken by which candle? So it could be this one, or it could be this demand zone here. So you can mark this entire area. So now that you have your confirmation, you initiate your trade. You're gonna be basically buying this market. So you set your stop loss below this structure here, below this structure here. Okay, you're gonna have to mark your you put your stop loss below this structure here, or you can also put below this structure here. It's gonna be a little bit bigger. It's gonna be about 26 pips because you're trying to target a higher risk to reward. Okay, now let's go to the 4-hour time frame and target a previous structure. All right, boom. Okay, look at that. You see, you made 7 to 8 risk reward ratio, risking only 27 pips, and you made 210 pips. And then this move caused another break of a structure. All right, it caused another break of structure to the upside. All right. So what you do is within this move that broke this structure again, you're going to have to go to the low time frame and find out what caused the break of this structure here. So it could be this area. It could be this one here. It could be this one here. It could be this one here. All right. So now you mark your structures. You go to the lower time frame and look for the same thing. All right. So what caused this? Okay. So on the 1 hour time frame, you can see before the break of this structure. Let me mark it. Okay. Before the break of this structure here, this was your last down candle that caused the break of this structure. That means your demand zone is right here. So what happens is the banks, what they do is they started buying from here, you know, invalidating the supply here. So they went up and now they have to come back and to refill the rest of their orders. So this is where you look for your entry right there. Okay. Now you're going to have to go to the lower time frame. You're going to have to go to the lower time frame on the 15-minute time frame or the 5-minute time frame until we find a change of character. So now we have lower high, lower low, and then now we have a change of character. So now we mark our trade somewhere here. We look for entry, long position, put our stop loss right here, and then we target our next the next high there. All right, 15-minute time frame, 30-minute time frame. Let's replay this. Okay. Boom. You hit another target right there. How much are you risking here? You're only risking about 41 pips. But what are you making is you're making 134 pips. This is 3 times what you're risking. Okay. This is 3 times what you're risking. This is some of the premium entries that you can get. Okay, this way the banks enter the market. Basically, you are trading with the banks. You're not trading like a real. Of course, you're a real trader. You don't have a big account, but you're trading with the big boys, and you are getting the best premium prices, just like the banks do. All right. So now that we know how demand works, and I know no one is teaching this on YouTube. They're only showing you guys how, you know, supply and demand works, but they're not showing you the interest, okay, based on the ICT. When you hear about the ICT strategy is how the market works, okay? The market always makes ABC move. So if you look at here, the market goes up, down, and then up. So this is what they call, okay, here, A, B, which is the pullback, and then C, which is the move that breaks the structure. So ICT strategy is one of the best. It's the best strategy out there. It's not just a strategy, it's the nature of how the market moves. So you have to master how the market moves. You have to know the break of structures. You have to know the direction of the market. If the market is going up, you have to find the higher highs and higher lows. If the market is going down, you have to find the lower highs, lower lows. You always have to know where the market is heading next. All right. You gotta build a story around what the market is doing. Don't make up your own stories. Always follow the market and understand what the market is telling you. After that, you create your own story and look for a setup. All right. So now that we understand how demand looks like, we're gonna have to illustrate. We're gonna have to find out how supply looks like. All right. So the market was going up still. Let's continue playing this market. This is your last higher low that created higher high. So we're still in an uptrend market, okay? The market is not changing phases yet. We are still trading an uptrend market. And then over here, sorry, we have a little bit of break of a structure. Okay, so let's see if this is gonna be the supply that's gonna continue, that's gonna reverse the market. Okay, let's see if this is our change of character, because we have something that looks like a break of a structure to the upside, because this higher low here created this higher high. Okay, so now we have a change of character. So let's see what happens from here on. Oh, we invalidated. Now the market is still going up. The market is still going up. We don't have a valid entry yet. This is why you have to wait for your setup. This is why you never rush taking a trade. This is why you always have to wait for your confirmation. Okay, so now we went from here, breaking this structure here, break of a structure, and creating a high here. All right, still we are in an uptrend market. All right, we're breaking a little bit of structures we're breaking kind of like internal structures, because this is all internal. This higher highs, higher lows that you see is all internal, but the original the original order flow higher low is right here. So once we break this higher low, this is going to be the official break to the downside. All right, let's play. Let's continue playing. Now we broke the original move, which is the higher low here, that broke this structure to the downside. So now what we're looking for is, we're looking for a downtrend market. Instead of looking for an uptrend, now you're looking for, instead of looking for demand, now you're looking for a supply zones. Okay, so let me clear this up real quick. What you do next is, first you mark your change of character. First, you mark your change of character. This is your last higher low that's broken. So the wick matters. You see, whenever you see the wick, a lot of people say, don't worry about the wicks, but the wick is actually a price. It went down and then went up a little bit. Okay, so that's a real price. You shouldn't ignore that ever. So this is your change of character. I usually mark it as a CH. Okay, just in short. All right. So now that we broke this structure, what caused the break of this structure? What caused the break of this structure here? Okay, this structure here is broken. Okay, this move broke this structure, but it wasn't a straight move that broke the structure. There was some type of stuff that was going on, so we need to find the lower high that caused the break of this structure here. All right, as we can see, there is a somewhat supply zone right there. All right, the market came down a little bit, went back up to retest it, and then came down, and now we have another break of a structure here. We have a little bit of break of a structure here. The market is giving us a signs of lower highs, lower lows, creating lower highs, lower lows to the downside. So now we have another break of a structure right there. So what happened? All right, we have another break of a structure right there. So once we identify this little bit of break of a structure, we can go to the 1 hour time frame and then mark our lower highs that create the break of a structure. So it could be this area here. So your supply zone could be this candle here that caused the break of this structure, or it could be this lower high that's going with the original order flow to the downside. So you mark your 2 point of interest, and now you go to the 15-minute time frame, and now you wait. All right, so now that you have a rejection here on your lower highs, you wait for a change of character somewhere here. Okay, and now you take your trade to the downside. You take your trade to the downside, target the next previous lows, which is right there. Boom, you target your previous lows, we break structure to the downside. So now we have another break of structure. Okay, if you go to 1 hour time frame, we have another break of structure right there. So we can see that this move straight up broke this structure here. So your supply, your demands, your supply zone will be this candle, because from here to here is what broke this structure. Okay, this is the area where the banks place their orders. Okay, so that is your supply zone. To the downside, all right, boom, right there. You see, you target your previous, your next lower lows. Boom, you have your, you basically targeted the previous lows. You get out, you get your money, and you walk away. So over here we have a sign of exhaustion. We have a sign of exhaustion. Okay, so now we're not breaking any structure yet. This was your last. This is your recent lower low. We broke the structure. We broke the structure here. This one here, and then now we did not break this structure yet. So we're waiting. Okay, let's see what the market is doing. So it's not breaking anything. So when this happens, the banks did not finish, fulfilling their orders or filling their orders. Okay, they just keep, the reason why they keep going back to this supply zone here, they just keep, filling their orders. All right, they just keep filling their orders. Okay, so when this happens, we don't have a break of a structure to the downside. We broke the structure. We came back to retest. We took the trade, targeted the next previous lows. When this is going on, we have no previous. We don't have any break of a structure, so therefore this is no man's land, meaning you're not gonna take a trade within here. This is a chaos. What's going on right now? There's some type of order filling going on here. Okay, this is a sideways market. When the market is not making high highs, high lows, there is no supply or there's no demand. We know the market is going towards the downside because we have a lower highs, lower lows, heading towards the down direction. We also have to understand, this can, this supply, this demand here can reverse the market to the upside. So we always have to be aware of what's going on around us. We have a structure here, so this could be retest to this structure here and then go up. It could be that, okay, or it could simply break this here back to a supply zone and then continue targeting the next structure, which is right here. Right here. Okay, so thank you very much, guys. I really appreciated watching this video. I'm glad that you watched it. I hope that you learned something from this video. If you have any questions, please put it in the comment section. I promise I'm going to be recording videos based on your comments. I respect and value your comments and your opinions. So make sure that you speak your mind and tell me how you feel about or what I should do next. All right. Thank you very much again for being part of the family. It's your brother, Jamal. Thank you and welcome back to Forex Zone. Have a wonderful, wonderful trading year. Bye.